Hello everyone and welcome to this week's weekly trade plan. Now this is week beginning the 15th of July 2018. My name is Tim and I'm more than happy to take you through this webinar. Just so that you're aware, this webinar is being recorded actually towards the close of on Friday. So just a day or two earlier than normal, just to get this posted and put together for you. So the prices might vary very, very slightly, but we wouldn't anticipate too much, to be fair. So for those of you that are new to this webinar, it's all about multi-time frame analysis. Obviously, whilst the markets are closed, now this is important because it allows us to take stock of what is happening to price, enables us to help us plan for the trade ahead. So we for the trading week ahead. So we'll be taking a technical look at weekly and monthly levels and looking to identify the important highs and lows and genuine levels of support and resistance that we can really use when we trade these markets next week. So as always, we'll be observing our 15 main liquid global markets. Just before we begin, as always, please do take a brief moment and familiarize yourself with the risk. Of course, there is risks involved in trading the financial markets, but we do have a very controlled approach to risk management. I'm sure, as I'm sure you are aware. Okay, so what is why is multi-time frame analysis? Well, we've identified a few reasons. Firstly, you can see clearly what is happening and who is in control of the market. That is very important. Sometimes the markets can be so choppy, it's really difficult to know what you should be looking to do in that market, and multi-time frame analysis can really help you with that. The larger the time frame, the more important the genuine level of support resistance becomes as well, so that's important to take note of. Now, it can show you the important levels where a market is likely to move towards as well. So, of course, we can use multi-time frame analysis to help us assess perhaps where we should even look to take profit. And finally, you're not just looking at higher time frames, also look at lower time frames because it can help you with identification of trend reversals. Okay, so let's go through the charts then. And I shall get this up on the screen. There you go. So let's start with the dollar index then. We've spoken many times just about the $95 level and the importance of this level. And you can see the importance again today. The high of Friday's candlestick, should I say, is 94.97. So virtually the $95 level. And we've had a bit of a significant reversal. So this level here is still a very, very important level of resistance in this market. So that's the dollar index. When we look at the weekly levels then, let's go into the weekly time frame so you can see we're still very much contained within a price action which has been moving sideways for now 5 weeks, as you can see on screen. So 1, 2, 3, 4, 5. In fact, 6, 7, potentially even 8 weeks were contained between the highs of 95 and the lows, which I shall just bring down ever so slightly down to 93.41. So 93.41. So those are the highs, and you can see how the market has been failing to break and push either above or below. So it's a really strong level of resistance in at this level. So those are the levels we work with for the week ahead. So then accordingly, we attempted to break above the weekly highs. And this is a good example in terms of why we like to spend this time just for 20 minutes every weekend to identify what's going on here, because we did attempt to break above the weekly high of the 1766 level, but we have seen the rejection of that level. So that adds some extra credence to potentially a trade that's going to continue to move to the downside. So that's what this candlestick told us. So with that in mind, when we look at the weekly time frames, we can continue to work with the lows of the 1507, but we will make a very marginal change to the highs. We'll just work with this week's high, which is the 1789 level. 1789 to the upside. So these are the weekly levels. 1789 to the upside and the 1507 to the downside. And moving on to the pound, we've actually got quite a strong bullish candlestick today, believe it or not, after the big strong sell-off for the majority of the day. So we've clearly got a lot of profit taking coming into this market, not to mention the kind of the geopolitical backdrop between the US, Europe, trade wars with China, and obviously issues with Iran, and the pressure that of course the US are putting on its allies, and obviously London had the grace of looking to welcome Donald Trump today on Friday, and it'd be interesting to see how that pans out. So I'm sure it'll be interesting to say the least. And we have had a really strong reversal off these lows now. So actually that puts quite a different complexion on some of these markets, which we will look at in more detail next week. But from the weekly levels, we're going to take note of the high, which is the 33.61. 33.61. So we can see this market, and we can utilize that level to the upside. Now to the dollar yen. This is a market which we did see the really strong explosive move above the 111.33. Now we're pulling back a little bit today, but we do anticipate this market to continue higher eventually. We have experienced a bit of a weak yen this week, so we're getting a bit of probably profit taking coming into the end of at the end of the week. So that's no major surprise. What we'd like this market to do is to come actually all the way back to the 111.33, at which point we might look to start taking this market to the long side once more. So that's really the plan for some of these markets. So we'll work with new highs and new lows. What I'm going to do is take away some of these levels in there, and we'll take note of the high, which is the 112.79. So 112.79, and to the downside where we can work with the low, the 110.27. So that's the dollar yen. The dollar CAD now firmly within this range, and we do have this ascending line as well, so that's very likely to provide some support around these levels. So for that reason, we'll continue to work with the 32.23 to the upside. We're actually looking, a part of the trading day today is to potentially, when these prices were up here, to capitalize on a bit of a breakout. But as you can see, this is why we like working with these levels, because it allows us to protect our capital and only get in when we get the actual signal to get in, or we get the price action or price moving to a price that we are comfortable getting in. So sort of a complete rejection of that level. So we work with those levels on the weekly time frame as well. The euro yen, just pulling back off its lows. So obviously the euro has weakened for a part of the day, and now recently over the last few hours it's kind of strengthened quite considerably, and we've seen the strength play out in the euro yen market as well. So when we switch to the weekly time frames, you can see a nice strong move. We do have potential resistance up at these levels, so it'll be interesting to see what is next for the euro yen. We are still in this trade to the upside. Now we've got a nice strong candlestick for us to actually stay in this market. So we may do that just for the short term and see if we get some continuation, but we are likely to see resistance around these levels. So if you happen to be in that trade and you wanted to take profit now, then that's perfectly a reasonable position to take for sure. Okay, so let's work with these new highs then. So we're looking at the 131.59. 131.59. And we'll take note of the lows as well, which is the 129.67. So 129.67. So those are the levels in there for the euro yen. And just finishing the round off really with the euro pound. We're clearly in this 10-month range, as you can see, maybe even a slight biasness to the downside from these levels, expecting it to just come lower eventually. But as you can see, we've spent 3 weeks now of just pure sort of sideways price action. So if we take that over to the weekly time frame, we're quite comfortable to work with the 89.70 to the upside and the 86.19 to the downside. So just let it do its thing. Now, an interesting market, as always, is the US equity market. So we've seen a strong week, actually, to the upside in the S&P. So let's take a note of the highs, the 2807. 2807. And to the downside, we'll take note of the 2765. Okay, so those are the levels there for the S&P. Moving on to the Dow Jones. Similar bit of price action, although we haven't really breached the level that we have in the S&P, which is just up at these highs. In fact, we're at that level now, really effectively. But in the Dow Jones, there's still a bit more growth to the upside before we get to this same level in the Dow Jones, and all-time highs are not too far away either. But when we look at the weekly time frame, we can absolutely work with new highs and new lows in the Dow Jones. So we'll look at the 25011. 25011 level to the upside, and to the downside we can take note of the 24497. Okay, so those are the levels there for the Dow Jones to keep an eye on next week. The Nasdaq, we have already broken the highs, and just to sort of just observe really more than anything, last week's high, we got a nice strong break to the upside. Yes, we did reverse, but look how the market has respected the weekly high, which is the 72.36. So we did get the explosive move through that level, but then if you have the patience to wait and see what opportunities arise, it can easily give you a good opportunity to take this market to the upside. Now, I can understand why that's not the case in this case with the Nasdaq, because we are approaching all-time highs. And in fact, we've now, this is the highest price. Today's high is the highest price this market has ever been. So looking at the weekly time frame then, we can work with these new levels to the upside and to the downside. So let's take a note of the high, which is the 74.13. And to the downside, we can look at the 72.04 level. Right. Those are the levels in there for the Nasdaq. So looking at the FTSE market, the consistent kind of choppiness in this market prevails, unfortunately. When we look at the weekly time frame, we can slightly increase the high, but that is all we're really prepared to give to this market at the moment. So the high is the 76.55. 76.55. So that's the FTSE market. Gold. We've seen this market attempt to sort of reverse really, and has now finished the week quite weak, as you can see. And just take note of the low of Friday's candlestick, which is the 12.3621. And if we look over here, we have the 12.3632. So there's only 11 pips difference between these two lows. Very, very significant. If we get a break at this level, we are down to the low sort of 1200s. So that might present some opportunities to us shortly. We will work with new highs and new lows So we'll take note of the high first of all, which is the 12.65.69. And to the downside, we shall work with the 12.36.21. Okay, so those are our levels, the weekly highs and weekly lows. 12.36.21 to the downside, and the 12.65.69 to the upside. Just finishing the commodities. We're quite delighted to see this price action pull back to the 69.38 level. And next week, we might get an opportunity to actually look to buy the crude oil. We're still in this uptrend. All we've experienced is a pullback like we have done on many other occasions before. So really, we want to stick with that trend. There's no need to get out of it unless we get a structural failure or significant reasons to get out. So the crude oil, we've currently sold off, so we weren't really looking to capitalize on the sell-off, but potentially we will look at the potential buy. So zooming in, we can absolutely work with new highs and new lows. 74.66. So 74.66 to the upside, and to the downside we have the 69.23. Oops. 69.23. Okay, that's the highs and the lows in the crude oil on the weekly time frame. And just to finish off with our two government bonds, which is the 10-year notes in the US. So we have a high of 120.49 and a weekly low of the 119.81, and you can see how we've just been very, very nicely just trading within that range. So we're going to continue to just stick and monitor this price range and see if we get those opportunities to potentially even capitalize on the next sell in this market. But we have been tested. We do need to be very, very patient. And a slight deviation today, really, in the Eurobond. We've seen a little bit of a move up, but we've seen this market reverse pretty quickly. So that's quite interesting. So what we can do is we'll just change the high, the 163.19 to the upside. 163.19 to the upside, and we can stick with the 162.05 to the downside. Okay, so that just about concludes then today's, or should I say, last week's trade plan. And all of these are weekly levels, highs and lows that we can really look to add to the degree of confidence in which we trade these markets. So do feel free to follow us on Facebook, Twitter, and LinkedIn. The details are there currently up on screen. And of course, if you do have any questions about anything covered in this webinar, then do feel free to email us at support@thelivetraderoom.com. So that just about concludes then this week's weekly trade plan. So as always, thank you very much for joining us. Do have a great weekend, and we do look forward to hopefully you joining us again next week. So from everyone here, take care, and we'll speak to you soon. Bye for now.